I released a video just about a week ago or so on 5 stocks I want to buy during this earnings season if we see their stock prices drop to a value that interests me. From that video, I asked you guys if you wanted to see a part 2 and there was a ton of interest in it. You guys smashed the like button on there and I am here to deliver on my promise. So guys, here's part 2, 5 more stocks from my personal watch list. And I hope you guys enjoyed this video, and if you do, remember, smash that like button down below once again to show your support for the channel. Okay, so just to recap, I feel I need to touch upon my investing strategy once again in this video because I know there's going to be a lot of people that haven't watched part 1 that are just going to watch part 2 and need to understand where I'm coming from. So there's really 3 things that I think of when it comes to investing. Number 1, I'm a long-term investor and my goal is to hold stocks for as many years as possible and realize gains over many years. Short-term price movement doesn't make me sell a business that I absolutely love and usually results in me buying more shares if I feel there's irrationality and fear in a business that I've thoroughly researched, understand, and find is undervalued. Number 2, I can be considered a value investor most times, which means I generally buy and hold safe blue chip companies with a proven track record. They provide good stability in my portfolio and provide me with the peace of mind with my investments. That being said, guys, I also love investing in growth stocks because of the upside potential that they offer and because I'm young and I got time on my side, so I won't rule out an investment just because it's a growth company. Number 3 is that I'm currently sitting on over 28% cash now, and I'm keeping a very close eye on the markets here, especially this week, as a lot of companies that I love are reporting their earnings. If we start to see some big declines like we did in Intel in any of the businesses that I own, I will be deploying my cash. The goal is to get my cash position below 20% if possible by the end of earnings season, so as long as deals pop up, I will be going through my watch list and buying up those stocks. Now, if you want to know exactly when I buy these stocks, what price I buy them at, and what stocks I'm buying, then consider joining our VIP membership group, link in the description down below. There's a Discord chat in there, and I let my members know every time I plan to make a purchase and when I actually do end up making that purchase. And of course, if you have any questions or anything, you can ask that in the Discord chat. We have a good community, we have great members in there, and I'm absolutely thrilled about it. Okay, so getting to the 5 stocks for this video. They're in no particular order, they're just kind of thrown in there. Again, I threw in a tech company and I also threw in a high growth company, which I'm sure you guys are going to be scratching your heads about, but I did cover it in a recent video and it did excite me a ton. So anyways, guys, let's get into it. Let's go over number 1 here. Of course, I had to include Apple here. It's one of the most owned stocks in the world, but Apple is a stock that I want to build into an even larger position. It's currently sitting up 76% during the last year, well outperforming the broader market. And guys, I was a buyer of Apple in 2019 when it was going through some tough times, and I did buy some more during the March lows, but this business is so good and keeps expanding successfully to new markets that I want to increase my exposure in it. Apple sits at over a $1.6 trillion market cap, making one of the top largest businesses in the entire world. They pay dividends, they have a phenomenal balance sheet, and they have so much cash that they can just keep buying companies and innovating to stay ahead of the curve. Despite all the negative headlines recently on Apple, they are still poised to grow slightly this year and have a double-digit growth year expected in 2021. If you think about it, it's mind-blowing, and they're expected to pull in nearly $300 billion in revenue in 1 year. Apple, guys, is a core stock in my portfolio, and I confidently can put my money in there and just not worry about it for the long term, and that is why I just had to include it in this video. The fintech giant Visa is next on our list here, and it's up a modest 6.5% in the last year. Visa is a cash flow machine, making it a very strong business, and they have such a bulletproof business model and technology that even with their main competitor MasterCard growing alongside them, they're able to comfortably stay number 1 and they're able to comfortably pull in tons of profit every single year. Visa is a massive blue chip business and another component of the Dow as well, sitting at over $428 billion in market cap. The company, like I said, is extremely profitable and commands a premium on the stock, which is why you rarely get Visa at a PE under 30. But during the March and April timeframe, we did see Visa trade in the low to mid 20s, which is when I was a big buyer of the stock. That being said, I didn't get to buy enough before it started moving up so quickly, but I do have cash ready and set aside if Visa presents an opportunity. Now, Visa usually has extremely strong double-digit growth in economic times that are good, but recently it has hit the brakes here. So in 2020, they're expected to actually see a slight decline, and next year they expect to resume back to growth of around 11%. What I like about this business is the fact that they give me exposure to the finance space, but they do so without the added risk of traditional banks because they don't hold consumer debt unlike some of its competitors. Speaking of which, guys, if you want to see a comparison video of Visa, MasterCard, maybe even throw American Express in there, kind of go through my thought process on why I decided on Visa versus these other two companies, let me know in the comment section down below. I think it'll be an interesting one, and if you guys want to see that, just let me know. Alright, number 3 here has probably surprised you, and the more research I do in this business, the more I like what I see. Now, Beyond Stock did go public in 2019, so it's fairly new to the markets, and as a result, it has seen a volatile ride. It's currently down 43% in the last 1 year, but has most recently found some sort of stability. That being said, guys, I still want to see lower prices on Beyond Meat here to build a position in, because even at prices right now, I don't feel that it's really undervalued in this market. Now, depending on their upcoming earnings report, we may see this opportunity soon. We're currently sitting at around a $8 billion market cap, which is good, but like I said, for what they do, I want to see a better valuation. That being said, if you are a believer in meatless alternatives and you think that's going to be the future of the world, everyone's going to be shifting to that, and a business like this is going to succeed, then I think that there's no better marketed company out there besides Beyond Meat to fill this need. They have competitors like Impossible Foods, but as of right now, they are not public, and other companies do have some meatless options as well. But I'll say this, from a marketing perspective and a consumer brand perspective, Beyond Meat, in my opinion, has won this game with consumers because of their brand. This year, Beyond is expected to grow by around 54%, and this is the benefit of being a relatively small company still. Next year, this continues with another 54% growth expected, bringing their expected revenue to around $700 million. So here with Beyond, the growth is there, the balance sheet is strong, but the valuation needs to come down a bit more before I'm happy and put my money into it. Procter & Gamble is a classic company and doesn't need any introduction, and in the last year it has remained relatively flat at around 8.5% up after some wild swings that it saw in March. This company is one of those stocks that provides you peace of mind where you know the business is so well diversified and so large that they're going to be around for the next 5, 10, 20 years without any issues really. And because they fill consumer needs, they have such a strong hold on the market. Now, I wouldn't expect Procter & Gamble to provide massive growth numbers for me, especially since this is a $311 billion company today, but I can see this as a $400, $500, even $600 billion company over the next few decades. You do get a consistent and safe dividend here with the stock that grows year over year, so that's generally a selling point for investors that are looking at Procter & Gamble. You can see here that revenue growth for this company is relatively flat, but that's fine. It doesn't need to grow by massive amounts to sustain the business and keep paying those dividends. Sometimes, guys, having these reliable companies in your portfolio can help balance it out from other extremes like Beyond Meat, for example, which can see a 50 to 100% swing to the upside or downside in a matter of months. But with Procter & Gamble, you get that safe, consistent stream of income year after year. But with Procter & Gamble, you get that sense of safety and stability year after year. So closing out our top 5 is Nike, and this one is one I've covered quite a few times on the channel recently, but wanted to reiterate it in this video. This stock is up 12% in the last year and saw some extreme sell-off in March with the market selling off, which is when I first dabbled into this business. Nike is one of the few consumer apparel companies that I'd ever own, and I absolutely love their business from an investment and consumer perspective. Now, Nike is no slouch, guys. This company is a Dow 30 component and currently sits at over $150 billion market cap, so they're huge. Their worldwide reach and integration into sports and culture is what gets me excited here, and their management team is phenomenal at continuing to release relevant, exciting products that consumers just can't wait to buy. Now, Nike is not a high growth company, but they do have respectable growth considering their size. 2021 is expected to see some low single digit growth at around 13%, which would pull in around $44 billion in revenue. Now, that's a lot of money to pull in from an apparel brand, but what I like here is that because they're integrated in sports, consumers are constantly purchasing new jerseys, shirts, shoes, etc. of their favorite athletes, and this trend, in my opinion, will just keep going for as long as sports are relevant, which I think will be a very long time. So despite the struggles they may be seeing here in the short term, I think long term Nike is still a very strong brand, and as long as humans enjoy clothing and good clothing, stylish clothing, high quality clothing, Nike is definitely a company I will continue holding. So guys, over the last couple of weeks or so, we've seen a few cracks here and there in the market. There's been some days where we see volatility pick up, we see the Dow down a few hundred points, and we see a lot of stocks sell off quite a few percentage points. This doesn't mean that a market crash is coming, and this doesn't mean that we should sell all our stocks and just wait for a market crash so that we can put all our money back in. That's definitely not what I'll be doing, but what I am doing is watching the market closely, watching these individual stocks closely, and as they report their earnings, I'm going to read through that, listen to the conference calls, and then make a decision on if I want to throw more money into those businesses. Now, apart from these 10 companies that I've covered in these two videos, there are a lot more that I have in my watch list, which I'll be watching closely, and I'll tell you a lot of them do report this week, so I am excited. Guys, I have my cash ready, and I just hope that we see some deals out there so I can start deploying that cash again. It's been a while since we've seen some good deals in the market, and I'm ready. But guys, what I really do want to hear from is you. I want to know what 5 stocks you have on your personal watch list for this earnings season. I know we've seen a couple of large companies report already, but this week is the real big week where the major companies out there start to report and give us an idea of what the next few months are going to look like. If we see some disappointing guidance, I think it's going to send stocks lower. However, if things are in line or we see beats, I think we can see prices relatively stable for the most part and slowly continue moving higher over the next few months. Regardless, whatever stocks you want to purchase, this is the time to really build that watch list, be ready with your cash, and when you see the opportunity, start deploying, because you never know how long those dips are going to last and when those stocks, if they're good businesses, will eventually see a recovery. Guys, thank you so much for your recent support. I really truly appreciate it. Smash that like button down below once again if you haven't done so already. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.